Good day all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday the 9th of April 2019. We're just after 4:40 p.m. Central Daylight Time, a couple of minutes away before the boards clear, which is at 4:45, and then trading starts again at 5 p.m. You can see the stock market down because I think that what we weren't ready for, at least I didn't see this coming, was all of a sudden the Trump administration announcing they're putting together a package for $11 billion of tariffs on Europeans. The reason has to do with their Airbus. They're going to come back and look at Boeing and say that the U.S. supports Boeing, and we're going to get into a tit for tat. The rationale that why this being done is beyond me until you solve the Chinese situation, which we haven't solved. So I guess it's like opening another war front. We've been talking about it, which I thought, and I think a lot of people thought, was to get the Europeans in a position, let's talk, let's do it. Of course, now that you're doing it this way, it's like taking a sledgehammer, and that isn't the best thing we can be doing. And the market has said that. What else did the market say? The market went to the safe havens. Now, whether it's for one day or not, I don't know. But the gold got a bid today as you broke in the stock market. The bonds and notes got a bid, and the Japanese yen, the traditional safe havens. At the same time, because you get nervous about world trade, admittedly, we've been on a streak to the upside in the energies, but the crude products gave back something. As we look at the stock market, one day does not make a trend. I know you know that. So we can still say that the market's been in a heck of an upthrust, and on Tuesday of this week, we're down 13.5 points on a chart of just closes for the close, not from high to low, just closes. So from Friday's close to where we're at now, down 13.5 points. When we look at the chart action today, it looks a bit heavy up here. What did the market do? This is called an outside day down. So the market made a higher high than yesterday, a lower low than yesterday, closed lower. Two things with that I look at. Number one, that is a resistance point now. Number two, if you take that out, be it tomorrow, Wednesday, or Thursday, it's a sign that the market doesn't want to pause on that and might go to another level to the upside. But for the time being, it hurt the market. How much? Well, we'll find out in time. The pattern is still one of higher lows, higher highs. If the market were to take out 28.71, which is only 10 points away, you might be putting in the price in the 18-day average making a run at each other. You can see that the Bollinger Band, which we've been hitting day after day, has done its job of restraining the rally in the market. In terms of momentum, the positive is you haven't lost the embedded reading. Both numbers are still over 80. They were over 80 yesterday. They were over the 80 the day before, and the day before. So what we have still is a market that on breaks until the red line closes under 80, the market is saying that it is still in a buy mode, even with this happening. Lose that reading under 80, and then I'm going to look for price in the 18-day average to have the potential to make a run at each other. In the NASDAQ, you have the embedded reading. The market is stalled against the upper Bollinger Band. It did not have the same reversal day as the S&P, and it is still looking, excuse me, because the momentum is strong. I have bad allergies, so I apologize for that. The Dow is the weak one. The Dow gave it up, had a break through the previous low, lost the embedded reading today. If it doesn't get it back right away, look for price in the 18-day average to come back to each other, and we'll see where they go. Obviously, that news today affects a company like Boeing, and that weighs down on this particular market. I don't think any of us really saw the president ready to do, excuse me, what he did. In the Russell, we still have a market that's got higher lows, higher highs, but do you notice what this market's done? It rallied into the Bollinger Band and then the 200-day average of closes, ran out of its muscle, as you call it, trying to back off. Let me get to the VIX. 18-day average of closes, 1401, battleground for this market right now. The pattern, lower low, higher high, oversold. So you went back to a neutral stance pretty much there. In the T-bonds, with the buying that came out today, the question now is, and I think that what I should have done is taken this arrow and had it point up. If I'm correct, look at yesterday, 148.7 to 147.17 is the range. You took out the high, you took out the low, and you closed higher. So this red arrow, and I did that wrong, should have been pointing up. The key is not to take out today's low of 147.16. You are oversold, stuck at this 18-day average, but I'm going to say today that the trend turned up because you closed right on the 18-day average and you've got the outside day up. Take out today's low. I'll change my opinion. In the 10-year notes, the settlement today just under the 18-day average. So while the swing line's up, you did not turn the trend up. You've got the mark, well, the swing line maybe, but not the trend because you didn't close over that 18-day average and momentum is still pointing down. TLT up. Higher lows, higher highs, and settled over that 18-day average. The risk not to get back under yesterday's low, and that low was, let's just see here what it is. It's 123.52, so that's the number you don't want to take out. If you did take it out because you've got a higher high, you wouldn't start a downtrend. You would just be in a market that's what I'll call meandering, either side of that 18-day average of closes. In the dollar index, at least on the close, you lost your upside momentum. If it stays lost in the early evening, don't be surprised if price and the 18-day average make a run at each other. You've now got a pattern of lower highs, lower lows, but it's nullified because you closed over the 18-day average of closes. And if you look in the eurocurrency, you've got a pattern of higher lows, higher highs, and you lost your bearish embedded reading. That puts into play the 18-day average getting hit. In the British pound, lower low, higher high. Miss May was today in Germany meeting with Miss Merkel, German Chancellor. She met with French President Macron. I haven't heard too much about that yet. That's been the sticking point. And now the question is, what is she going to get from Brussels tomorrow when she meets with them? Find out tomorrow when we wake up. Japanese yen, lower low, higher high, into the 18-day average potential, but not a trend. Just sort of ran out of the downside momentum here and sort of meandering back and forth. Bitcoin got over that upper Bollinger Band and it's just pulling to the right-hand side. It's not a sign this market's tired yet. If anything, the market's got both numbers over 80 today. It had both numbers over 80 yesterday, not the day before. Tomorrow's the telling day. A strong close tomorrow will give the market what we call that embedded reading. It could keep running that Bollinger Band on that scenario. On the energy market, would you have thought that Brent was going to lose all this way to WTI? Remember, we were talking, we're producing too much, no outside export markets. Well, it's not quite the way it's working out. As it turns out, there's big demand for our oil because we don't know what's going to happen to the Brent in terms of the Libyan situation right now. And you can see how the market just keeps running either side of this upper Bollinger Band, widening out very slowly that upside. Russia today said that they don't want to see the prices run away to the upside, and they'll consider if they want to produce more oil at the next OPEC and its ally meeting. In WTI crude, you're just running this market to the upside. This is going hand in hand with the embedded reading, as is the move in the rebob. Look at how that's going. And every day I wake up, another nickel higher in gasoline. What did we start talking about when I did my energy report for you about a month ago? I said, watch out. You're now going into spring, summer, and you get stronger bids. Last, natural gas. You lost the downside momentum. When you lose that, it's often a setup for price and the 18-day average to make a run at each other. Let's see if that is the idea that the market has in mind. That's how I'm reading what the chart might want to do. Want to remind you, my morning subscriber video. What I do in this video is pretty simple. Each morning, I hope I don't cough. I've done 3 videos in a row is the reason that I'm coughing right now. To make a long story short, I start you off in the morning with my charts on my computer that look like this. I'm not in the video. You'll hear my voice going over it, hopefully without coughing, and I can cut it out of that. but I'm going to go through 40 to 45 charts. I'm going to do a review of some ETFs. Hopefully you're having a cup of coffee. And I'm going to throw at you the trade that I'm seeing at that moment on each of these different categories of markets. Now, the way I do it, once I post it, you'll have a drag bar at the bottom. Let's assume you wanted to go to the meat market. Just drag it right there. You'll see your meats. Want to watch them all? You can watch them all. But I can get specific in that. I can't get that specific in these tapes. These tapes, I'm allowed to talk general market trend. I can talk chart action, what I think the pros are doing, where I think you should do, technical and fundamental ideas, and I can say buy here, sell there, put your stop there. Can't do this in that. So why? Well, the idea there is I know how I began in the industry, and I always wanted to know what another pro was thinking. The problem is today you can't find them. Let's face it, this day of the internet has made talking to people more difficult or not necessary. It's also one of these things you wake up, you're placing your trades on your own. I just read CNBC said 75% of Americans are managing their own money. That's pretty impressive. Let's assume you're one of those. All I'm trying to do is give you an idea as a sounding board. Maybe you want to buy the stock indices tomorrow. Showing you what I see, reasons to do it, reasons not to do it, or saying do it here, do it there. I can go on and on with the markets. What's it cost to give it a try? 26 cents a day or $7.95 for the first 30 days. No contract, no anything. You can stop whenever you want or keep going. We offer a 1-year subscription at $156 a year. So to find out, try it out, go to our website, go under research or education, and under that all you do is go to Ira's morning subscriber video. It's all explained. I'm Ira Epstein. Have a good day.